Good morning. Welcome to our first community forum of the year. I'm Judy East, and I'm the chair of the Nevada County Campus Council of Sierra College Foundation, the sponsor of the community forums, and I'd like to welcome you all today. It's great to see so many people here at Sierra College. With respect, we acknowledge the Nevada County campus of Sierra College as the traditional and unceded homelands of the Nishanan peoples. For countless generations, the Nishanan have carried out their responsibility as stewards of this place, originally known as DASPA. Sierra College commits to an ongoing relationship with the Nevada City Rancheria Nishanan tribe and their future generations, who are an integral part of the Sierra College community. And just a little bit about the foundation. The council's purpose here is to support the programs and students at Nevada County campus of Sierra College. We are an arm of Sierra College Foundation. Every year we put about $20,000 into the campus in programs and help for students. Among our programs are scholarships. We managed to secure 5 Osher scholarships, that's $1,000 in perpetuity for Nevada County residents only. In addition, we have a 7th grade day. We bring students from 3 of our middle schools up to the campus, students who would normally not know about college, so they can see that they in fact can attend college right in their backyard. We sponsor the art show, we sponsor the lecture series, and we're in the process of revamping the Alumni Association, so there's some information on the table. If you've ever attended Sierra College, you can be part of our Alumni Association. We'd like to thank you for being here, and if you have not been here before, after the forum, please go up to the campus and see what your amazing tax dollars have provided for this community.
Thank you, Judy. Welcome, everyone. My name is Cheryl Dell, and I am going to get right to it because even though we have a little over an hour, I am convinced I'm not going to get to all the questions that you all have about the FAIR Plan. So let me start with an introduction of our guest today, Phil Irwin. Phil is a seasoned professional with over 2 decades of experience in the insurance industry. He currently serves as the broker liaison for the California FAIR Plan, where he plays a crucial role in bridging the gap between brokers and the FAIR Plan, ensuring effective communication and streamlined operations. In addition to his role at the FAIR Plan, Bill is the president of 2 prominent insurance agencies, where he continues to leverage his extensive industry knowledge and leadership skills to drive success and growth. His long-standing commitment to the insurance field underscores his expertise and dedication to advancing insurance practices. Phil, welcome. We are thrilled to have
thank you. Thank you. Happy to be here.
So I'm going to break today's conversation into 3 basic parts. The first one is I just want to start with laying the foundation about what the FAIR Plan is and how it works so that we all start in the same place. And then we'll get right into some of the big changes that are being made. The second part of our conversation today will be how's it working? What's going right, what still needs a little bit of help, and how is that impacting Nevada County? And then the third area is what the future looks like. So, you ready, Phil?
I'm ready.
Okay, so let's start with just laying the basics, like I said. Tell us how the FAIR Plan started, how long it's been in existence, why it exists.
That's a great place to start. So the FAIR Plan started in 1968, and so it's a little over 50 years old. And the timing of the FAIR Plan and the purpose of the FAIR Plan began, it was during a period of civil unrest. Specifically, it was the Watts riots, and there was also some major wildfires that year, I believe, in Santa Barbara. And that was really the first period where carriers as a whole were looking at certain markets and saying, we're not comfortable writing insurance at this time. So the FAIR Plan was established to ensure that all Californians would have access to basic insurance coverage.
But yet you're not a state agency, which I think confuses a lot of people. So talk to people about the structure of the FAIR Plan.
basically, at a layperson's level, it's a pool that was started as by mandate, and it was funded by all admitted companies, the member companies that provide property insurance in California. So I believe there's 118 now. I don't know in 1968 if that was still the number, but that group, every company that provided property insurance, put money in to start this organization, again, as the insurer of last resort for folks that weren't able to get insurance elsewhere.
And, you know, near and dear to the heart of anybody on the FAIR Plan, how are rates set?
So the rates are determined on an actuarial basis. I can't believe I got that word out. But so it's way beyond my pay grade. But basically, the bottom line is the rates are based on the proportionate amount to cover losses based on the amount of exposure they have. So that's really the bottom line. Is they look at the exposure. There's lots of factors that go into the rating process. But that's basically the essence of it, because they want to collect enough premiums to be able to cover the losses. That's what the term actuarially sound means, is making sure there's enough money to cover the losses. I mean, it's a not-for-profit organization. So again, their primary function is to provide coverage and be able to cover the losses.
So I think it's important to emphasize that it is a not-for-profit. So it's not like there's a company that's making any money off of the FAIR Plan.
No, absolutely not. Okay.
And I saw on the flyer that several of you have this term actuarially sound, which is not just hard to pronounce, but hard to understand. So basically what that means is that there's some modeling that's done, and the rates are set based on how much you would need to cover a disaster in the area. Is that right?
Pretty much.
Okay. Okay. And so once that work is done, the insurance companies go in front of the State Insurance Commission to have their rate increases improved. Does the FAIR Plan go through the same process?
Yes.
And how often are rates increasing right now?
Well, it's not a set time period, it's as needed. So basically it's a constant assessment of the exposure and the rates to see where we're adequate. And just to give you an example, if you have this trend graph, I apologize, I'm very impressed. I have to comment on the turnout. What a great statement to this community for caring to come out and be part of this meeting today. But if you see the trend line, and this is also on our website, in the last 6 years, it's just gone north. And if you look back, our current rates, the rate increase that was took effect in December, was really based on 3 years prior to that. So if you just go back basically 4 years, our current rates are based on where we were 4 years ago. Because there's a process to develop the filing, submit the filing. That filing that was approved in December took about 2 years to get approved. So the fact is, their indication for that filing was, I think, around 40%, and 15 got approved. So even the rate need didn't get approved. So the actual rates we have right now, and based on the growth we've had, are far from where they probably should be. So just to give you an idea, that's how it works.
And so the rates where people are getting renewed at are, based on a few years ago. One of the things we've all read recently is how the private insurers are able to go back and get these, double digit, a couple time a year increases. Is that open to the FAIR Plan?
Yes, the FAIR Plan, just like every other carrier, would have the opportunity to apply for rate increases as needed. Okay. And as determined a priority. Okay.
So one of the other questions that has come up is the FAIR Plan rates seem to be in some places different from one broker to another broker. How does that happen?
So a couple things, that shouldn't happen, and the what would make that different, so from broker to broker, what would make the rates different is basically if they're providing different coverages. So again, no matter, the FAIR Plan aside, usually if you go and talk to two insurance professionals about getting an insurance quote for your home or your car, whatever the situation is, there's going to be differences in coverages, deductibles, recommendations. There's always going to be some slight differences, and that's why it's important to talk to different folks and make sure that your schools of thought kind of align with, and what's important to you align with the way this is being set up. And that's the only reason there would be different prices from one fair plan policy to the next on the same home is if different deductible options were chosen or different coverage options were chosen. And you really want to make sure that you understand, because the fair plan is completely customizable. So you can pick and choose each element and the amount for each element that you want that's important to you. So it's not a prepackaged amount of coverage. So that, again, that's the only reason you would see a difference from one broker to the next, is one may not be insuring it at the same level. There's a very important term that you all need to know. It's called insured to value. And that's just the fact that your home is properly insured. So that's the baseline. You want to make sure that whatever the reconstruction cost is of your home today, that it's insured to value.
And talk about that a little bit more. Like, what should you do? Go to Zillow and see what your value is? And I know brokers help.
No, that's another great question, because it's confusing, right? We all look at our home value and feel like that's how much coverage we should have. So if the replacement cost for your home, your dwelling, in my mind, in my opinion, it's a fluid number, because if you think about it, the cost to rebuild your home, the materials, the labor, any type of permitting fees, that process, on any given day, at any given period of time, it might vary a little bit. So the key is you want to have enough. You want it to be current. You want to know that, okay, in the last 12 months, what's gone up? Everything. So you want to make sure that you're considering inflation, and those are conversations you want to have with your broker every year, because what fit 5 years ago, 3 years ago, 2 years ago is not necessarily what the circumstances are today. Because at the end of the day, if a catastrophic event occurs, you want to make sure the check is written for the right amount of money to cover your home, to restore your home. That's the bottom line.
Phil, last year when you were here, and some of you, raise your hand if you were here when Phil came last time. Okay, so this is going to be new for some of you. A real aha moment for me, and we'll talk about the growth as we get into this session a little bit more, but a real aha moment for me was, Phil, when you said, yeah, remember, we only insure properties that other people don't insure. So by definition, we have the riskier areas of the state, and are growing exponentially in those riskier areas of the state. But the question that I want to ask is, can you turn someone down? So if a property is just a mess and the owner is not doing anything, does the fair plan still insure it?
Yes, and again, I don't know if I lost my microphone. So again, it's very hard to get turned down by the fair plan, and again, that's good, because that's given everybody access to insurance when they aren't able to get it from another carrier. There's different reasons why people get turned down, not only from their property, from other carriers, maybe the condition of the property, but also maybe their loss history. And again, those are traditional areas where the fair plan would come into play for a consumer. But the main things that the fair plan looks for is your house is intact. It's in good order. Sometimes they will, if there's major fire issues, as far as debris, they will talk to you about that, or trees that are just on top of the house. But it really takes a lot to get to be disqualified from the fair plan. A big one, because they follow federal guidelines, is illegal activities taking place on the house, on the property. Again, they'll ask that be removed or addressed. But again, in my history, I haven't seen any, personally, I haven't seen anything that isn't insurable from a homeowner standpoint.
But all of those high-risk plans go into this actuarial that helps set the rates and
so
all of that.
100% of what's in the fair plan is 100% of what nobody else wants.
So not all that long ago, the San Francisco Chronicle put out a database of what people are paying on average in different areas. And it was for private insurers, not the fair plan. But Beverly Hills, on average, if you live down there, you're paying about $10,000 a year. Can you not hear me?
No. You have to eat the mic.
I have to eat the mic? You could also turn the mic up just a little bit. There we go. So if you're down in Beverly Hills, on average, if you have private insurance, you're paying about $10,000. If you live in 959, this is for 2023. If you live in 95949, you're paying an average of $3,264. If you live in 95959, you're paying $3,032. So a very different rate than what a lot of people are seeing with the FAIR Plan. And I wanted to kind of just put a fine point on this. The rates that are set because of the group of homes that are in the FAIR Plan and the projected amount of covering losses should they occur.
Correct.
Okay. So, and I think that's really important when you see other rates. So let's talk then about some of the changes, because there have been some really big changes and some important changes since you were here last year. Let's start with the home hardening. Talk about that.
No, that's a great topic. So, just discounts in general. There's 3 discounts that are available. The first one being a community-based discount. It's called Firewise, and there's, again, in Nevada County, there's several Firewise communities, but that's been a really, we've seen a big increase in organizations that are getting that certification. It's really unique if you're not familiar with it, where they determine the community based on, literally certain streets, or sometimes it's just one gated neighborhood, sometimes it's a full neighborhood, so really it varies based on the designation of, where it starts and where it stops, and that's, the group's choice. And again, it's just increased home hardening efforts. And that's taking care of defensible space, which is what you can control on your property, and then other safety measures on your home. So the FAIR Plan now has a discount. So they have a Firewise discount, which is 10%. And then there's also a discount for home hardening itself. So just the home itself, there's multiple features. And again, it's off the top of my head, it's mesh siding or mesh vents that are 1/8 of an inch. There's condition of the material of your roof, non-combustible, 5 feet of clearance around your house. And one element, unfortunately, on that piece, it's you have to have enclosed eaves. So that's the one. There's 5 features that you need to have to qualify for it. So newer construction is the one that's going to qualify for that piece more frequently. But then the defensible space is, again, pretty consistent with what Firewise and CAL FIRE's expectations are. So that's one that most people can qualify for. So that's that are taking care of their clearance. So definitely, if you don't have that today, work with your broker directly. They can have that added to your policy, or any of those.
And you can add it at any time, right? You don't
Correct.
have to wait for renewal.
Correct.
Okay. So if you have been on the FAIR Plan and you're in a Firewise community, how do you know if you've gotten credit for that? If that's something the broker has done, you just pick up the phone and call your broker and say, hey, do I have that discount?
Yeah, it wouldn't happen automatically. You'd want to, and either at time of your application, that's a question on your application, where the broker would put the name of the Firewise community. Everyone that's in a Firewise community knows it, because they get a certificate and they're held to standards, and it's an extensive ongoing process. So it's best, and you're provided with a certificate. It's best to provide that with your broker, and they can make sure they're aware of that, and they'll get that submitted for you.
Great.
What was the third item?
And then
There's 3 elements of it. There's the defensible space was the last one that I covered.
And what's that discount, Phil?
For defensible space, it's 5%.
And then for home hardening itself, is that another 5%?
It's 4.5.
So they come out
So-
and inspect your house?
Yeah, they would.
They do.
okay, so hang on just a second. So I want to be sure everybody is hearing these questions. So why don't you go ahead and just repeat?
So the defensible space discount is 5%, and then and then the home hardening is 4.5%, and it's off of
No, it's 10.
10 total.
No, 10 on the top tier, 5 on the bottom tier.
Correct.
14.9.
14.9 total, and then also you stack the Firewise, and then it's just for clarification too. It's off the brush surcharge portion of your premium. It's not the whole premium, but again, the brush surcharge is the majority of your premium. So that's going to be a big impact. So those are elements that you can control. And again, the fair plan is not designed to be competitive. That's another element where typically when you're seeing carriers at discounts, it's to gain market share and to be competitive with each other. These are discounts that are provided because they're going to make your house more fire safe.
So I want to spend a second on this. So Firewise Communities, I think you're absolutely right. Everybody here probably knows if they're in a Firewise community or not. And that's pretty easy to determine. If not, in fact, there's members of the Firewise communities here today that I'm sure can help you figure that out. That's a matter of getting a certificate and being sure your broker has it. But let's take a second and talk about home hardening. So let's assume that you have been on the FAIR plan and you've done a bunch of home hardening. And the specifics are on the FAIR plan website of what you need to do. Then what happens? How do you get your credit to get your discount for that?
You'd want to contact your broker and they would submit an endorsement to have that added, or you have it added at your time of application.
And then to the point that this woman was making, and someone generally comes out to the house to inspect that?
Yes, they will either, if you're getting it on the application, they would catch that information as they're inspecting the home, or they would send it, if it's something where the policy is already enforced and you didn't know it was available and you're adding it midterm, they would send somebody out, no cost to you, to verify that.
And Phil, you may not know this because you're a broker and FAIR plan rep, but so if I called tomorrow and said and talked to my broker and said I meet this home hardening requirement, roughly how long would it take for them to submit the application and then have someone come look at the work that I've done? Do you know off the top of your head?
The endorsement is processed right away. So once it's submitted, you would get credit for it, and then it would just be a period of time to validate it. And if, for one reason or another, if one of the elements were not met or satisfactory, then it would just come off. The discount would be reversed.
And so, okay, so I call, I immediately get credit, and then it's proven on the back end.
You call your broker, they process it, then you would get credit for it.
So that's very much like the FAIR plan works in general. You trust me if I say I can't get another insurance coverage. I don't have to show you, or your broker doesn't have to show that I'm not eligible.
Well, your broker acknowledges that they've done a diligent search to make sure that there is not a viable option outside of the FAIR plan for you.
Okay.
Before placing you with the FAIR plan.
Okay, great. So, so that's a big change, and a change you kind of telegraphed last year that was coming. Another change has been this risk analysis tool that the FAIR plan is now looking at to be able to look at things lower than a zip code level. Can you talk a little bit more about that?
Well, it's really just, sorry, I lost the, did I break it? Okay. Oh. Am I doing something wrong?
Here, take mine,
Take yours, okay.
and I'll see if I can figure this out.
It's really just utilizing technology more, because again, I think our older systems, our older process basically was dated and looking at basically determining a risk or rate based on the distance of a fire hydrant to, or the nearest distance to the fully staffed fire station. And now they're just looking at other elements of each home, looking at the amount of vegetation, access roads. Those are just some features. Is it the slope? Is it on a slope? Is it flat? Is it clear? Those are just other factors that will be woven into the rate to again, if it's more advantageous, you're going to see that reflected in your rate. If it's something where it shows this is a more extreme circumstance, then you're probably going to pay on the higher end of what the rates are.
Great. And I'm going to try something with the crowd. We'll see if this works. If you are on the FAIR plan and you're paying less than $5,000 a year, will you raise your hand? Okay, less than $4,000? Okay, so 4,000, and then that group was 5,000. How many are paying 5,000 to 6,000? 6,000 to 7,000? 7 to 8?
That's what we were told when we did it.
Okay, and then who's paying over $8,000 a year? Okay, so a pretty big spread. And I wanted to do that before I ask this next question. One of the changes has been in the way that billing can occur. So now I can not have to pay annually, as I was doing before. How is that working?
It's working well. We now have a monthly payment available. And again, for folks that are not paying out of their mortgage, along with their mortgage payment, folks that own their home outright or just don't have an escrow account, prefer not to have an escrow account, and they want to pay their insurance directly, you can now pay it monthly. And another major change was before, to get a policy started, it required a 40% down payment. Now it's just 2 months worth of payment to get the policy started. And then just something to note, if you are electing to go monthly, it's not automatic. So you would need to be aware, be ready to make your payments online. We've got a great new feature on our website you can actually check your payment status, check your premium status, and apply your payments directly at our website. Which is really the best way to do it. But again, if you're going to choose a monthly mode, you want to really make sure that you're reminding yourself that these checks have to physically be sent on time, or you need to go online and process a payment. It doesn't draft automatically.
And then the other, why don't you,
This is concerning payments.
okay.
The FAIR Plan has got rid of any kind of late payment. If you don't get your payment on time, by the date that it's due, you're done. They have no grace period anymore, which they did have in the past, and they've done away with that. And it's a huge friggin' problem.
And I'm gonna let Phil take this. I'm gonna cut you off, sir, because we have a lot to get to. So Phil will answer your question, and then any other additional questions, if you don't mind, hold them till the end. He'll stick around a little bit longer. But there's so many topics I want to get to, and I apologize in advance for not being able to get to all of them. So do you want to talk about late payments?
Sure. Like the gentleman stated, the option for grace periods is no longer a feature. But again, you're not excluded from getting coverage. So just really the answer is planning ahead, because really that's what a grace period, in most cases, a grace period is occurring because the payment wasn't made or there was a misstep. Most frequent thing is your loan servicing company changes, where your loan gets sold or transfers, and that information isn't communicated. We're seeing, I see it every day, and if there's other brokers in here, they would attest to the same thing. A lot of times your loan servicing companies are in different states, and they're not clear as to why there's two policies, or they get confused. And so when they're shifting, a lot more proactive communication has to take place from your broker side. And that's really the deal, and just to plan ahead. Renewal, you see the renewal coming in, let's make sure everything's lined up, make sure the right people are listed, the right mortgage servicing companies listed, and there's plenty of time to make sure that everything falls where it does. And so everybody should be hyper focused on the renewal period to make sure that everything is going to land the way it's intended. And if by chance it does not, it's simple to rewrite the policy it can be issued the same day at midnight. So again, that's when that does occur. But again, when it's going out of force, it's because something got missed. The payment wasn't made, or it was sent to the wrong place. So again, that's just something you want to key in on, because it doesn't mean you don't have a chance to get a new policy or get coverage. It just means it didn't get paid.
So one of the other really big changes, and I'm just going to go through this very quickly and then move on to how's it all working, is that the FAIR Plan has added commercial properties up to $20 million, and that includes some farms and wineries and those kinds of things. So there has been a little bit of impact because of that in Nevada County. But I want to get to how it's working. Because in your graph shows this too. The growth in the FAIR Plan has just been astronomical. I mean, I went back and looked at some numbers. In 2015, there were 141,000 policies. 4 years later, it hadn't grown by much. It was 159,000 policies. Now there's 420,000 policies. And that number is as of June. And the FAIR Plan has over 4% of the market. So it's becoming a really significant player in the world of insurance. And so I guess what I want to ask you is two things. Is the growth statewide, and are you continuing to see private insurers issue non-renewals at the same rate that they had been?
A couple questions there. So I'll start with the fact that our organization exists to be a temporary safety net. Our goal is to see the market restored and not be needed. So when you're seeing the FAIR Plan growing at the rate that it is, when you're seeing the FAIR Plan being asked to expand coverages or products or go into different arenas than it was originally designed, that's a sign that our state is still trending in an area that is not towards progress. And so, and that's where the FAIR Plan is making the adjustments as needed, and we're experiencing the growth, and that's what it's here for. Where we're seeing, and again, I can't speak to the other insurance companies and their non-renewals, but the fact that we're growing at the rate that we are in areas outside of the foothills, that's a sign that the non-renewals are continuing. I'm aware of them. I'm a broker. I see it every day, and it's you know, when you're looking at areas that you wouldn't expect the FAIR Plan, like Sacramento, it's where carriers used to be open to maybe somebody having a small loss or a loss in the past. Now the few companies that are writing don't want any losses, any prior losses. So then a house that would normally not be on the FAIR Plan is on the FAIR Plan. Tenant occupied scenarios, you know, so it's an investment properties, you have a rental property, again, in areas that are not up in the hills, that is ending up on the FAIR Plan now because there's less options. So much more frequently, it used to be, you know, a year ago when I was here, you know, it was the wildland urban interface, and for the last 5 years, the homes in the mountains that defined as the wildland urban interface was really the area that was being impacted the most, and that's statewide, that's everywhere. You know, that's Malibu, that's Santa Barbara, that's areas that you may not realize, but all these areas are being greatly impacted. And now it's beyond, because it's the carriers, that the action that you're seeing from companies putting pauses on writing new business or being much more aggressive with their underwriting or renewal process to where they're canceling policies or non-renewing policies. Again, people are falling back in the FAIR Plan much more than they ever have. But again, keep that in mind, the FAIR Plan's goal is to not grow. The FAIR Plan's goal is to see the market restored. And if you're seeing us growing at the rate that we are, that's just a big sign that we're going in the wrong direction right here.
And the exposure in Grass Valley and Nevada City is over $7 billion of FAIR Plan policies that have been written just in our community. So that is a significant number. I read that about 900 to 1,000 applications are being received on an average day. So talk about what the FAIR Plan has had to do to staff up and process that kind of growth, that volume.
It's been significant, and just to give you perspective, so when the Camp Fire happened, that's the Paradise Fire, I think there was about 50 employees at the FAIR Plan. And now they're utilizing additional temporary customer service folks to help fill the gap. I think there's close to 300 employees. It's so they're ramping up. The other probably the most staggering number for me is the number of registered brokers with the FAIR Plan. In December, I think it was right around 9,000. Now there's 54,000. So the amount of brokers that need to utilize the FAIR Plan to take care of their customers, the way that has grown, it has really just opened my eyes the most. And again, in my role, that's where I'm working with the brokers every day, helping them understand the product and processes and help them help their customers.
So, and certainly some of that are people who have owned their home that insurers are canceling, but the other part of it is new home buyers. And we thought we'd take just a minute and talk about what's happening in real estate in Nevada County, and I'm going to ask Betsy Hamilton to come up as she makes her way up with her crutches. So I'll do her bio very slowly. Betsy is a RE/MAX Gold realtor who serves clients in Grass Valley, Nevada City, and throughout Nevada, Placer, and Yuba counties. She and her family have called Nevada County home for over 20 years. We invited Betsy because she is the #1 buyer's agent last year. She was #2 overall, so she has some experience with sellers as well, and has been among the area's top 10 agents since 2017. I also want to mention she's won a lot of prestigious RE/MAX awards and things from the Association of Realtors. So Betsy, welcome, and I'm going to ask you to take Phil's mic so I can keep my mic and get the questions. So talk to us for a second about what it's like on the ground with all of these insurance changes.
Yeah, thank you so much for having me. This is such an important topic, and thanks, Phil. This has been really great. So on the ground is a lot of education and a lot of, depending on great resources to get the information, but buyers have a lot of questions. Buyers are already dealing with high interest rates, high home prices, and now they have insurance that is very hard to navigate. They don't understand. They're getting misinformation. Buyers from out of the area are coming here and thinking, can I even get insurance? And of course, that's how the FAIR Plan, why the FAIR Plan came about. So it's just a lot of educating, and buyers from in the area seem to just be struggling to, make payments and figure out how to buy a home, and having it increase so much. It's really difficult for them. So that's
Betsy, have you ever lost a sale just because of insurance?
Well, we get the information to the clients right up front, and that's where Phil's been a great resource and lots of other brokers in the area, getting us the information really quickly, and we get the buyers in front of the insurance companies really fast. And agents are very well versed in this topic, so they get to talk to their clients ahead of time and help them understand right away that the cost and what the situation is.
And last year, you were the #1 buyer's agent. Did you close anything that didn't have a FAIR Plan insurance attached to it? Anything with a private insurer? I guess to ask it proactively.
Last year, I probably had a few at the beginning of the year, maybe, but it definitely trended very quickly to everything being on the FAIR Plan.
And have you ever had a property turned down?
No. No.
Okay. So insurance, so for a buyer coming in, and it sounds like you just hit it head on. You just say, insurance is just like an interest rate. This is what it looks like, and you're very practical about it, but you've never had a problem on the back end then?
No.
Okay. How does the FAIR Plan impact a close for a buyer?
So at first, when everything was turning over to the FAIR Plan, they weren't ready for it. It was overwhelming, and the market was as hot as it was during that time, and so they were overloaded. But now, it was delaying things. But now they've got enough folks, and as long as you get to it right away with your clients, then it's not a problem.
And this is probably an impossible to know question because interest rates have also gone up so much. But how is it factoring into the price of homes that are selling? Like, do homes sell for less because insurance is more now, or is that a non-issue?
It's hard to track that exactly, but it definitely all adds up. High interest rates are definitely taking a toll. And this is definitely a big factor. I would say within the last year, I feel it more. The prices are higher than they were a year ago, and significantly so. I mean, I tell clients, our average price in the county is about $550,000. You can count on between $4,000 and $5,000 a year. A year and a half ago, I was telling people $2,000 to $3,000. So for the FAIR Plan, so it's a big difference. It's a significant amount. You break it down to a month, $400 to $500 a month extra on a mortgage that's already high. It's definitely hurting, especially first-time home buyers.
Right.
Yeah.
And what about sellers? Is it your sense that more people are leaving Nevada County because of insurance issues?
Absolutely, it's a key factor in when I talk to folks. Mm-hmm. Yeah, among other things. But.
And when did that start? Was that also about a year ago?
A couple years, yeah. When they started to get canceled in the high amounts, yeah.
Okay, great. Well, and we saw the distribution of people who are paying, $5, $6, $7, $8, more $1,000 a year. That is not an insignificant amount.
No.
To insure your house. Great. Well, thank you.
Yeah. Thank
feel
you
free
for
to stay
having
up
me.
here. I'm
Yep,
going to go
yep.
back to Phil because what I want to get into is the all-important topic of claims. It's not just about getting insurance. It's about what if something happens, what do claims look like?
So let's start, Phil, with just a couple of the basics. So I have a claim. Who do I call? Do I start with my broker? Do I start with the fair plan?
Whatever you prefer. I think I would prefer, I would suggest start with your broker and have them quarterback you through the process.
Whoops.
And okay, I would just repeat that. I'd say I'd start with your broker. You're able to go directly to the fair plan on their website, but again, you're relying on your broker's expertise, and they're going to help you through the process. So they're going to quarterback the process. There's different elements. Just as an example, the first thing that would happen, which we experience, is we're mandatory evacuated. That's probably the first level of a claim. You're mandatory evacuated if there's a fire event, and your broker could help you with that element. And then if there is a catastrophic event on your property that you need to escalate your claim to other features, other aspects, again, your broker is going to help you with that process directly.
And what should people be sure they have in their go bag relative to their insurance?
You know, that's a great question, and again, I think the good thing is we have a lot of our stuff on our phone, but the main thing is you'd want to have your policy number, your broker's information. That's the main, as far as your insurance is. I mean, obviously, if you have the deck page, as much as you have, the better. But again, they're gonna, if you have nothing, you'll be able to be identified and taken care of just the same.
And there's sadly been enough experience now in claims for you to know how claims are working, or have a sense of how they're working, maybe not in Nevada County, but in other areas of the state. Can you talk about that for a minute?
Yeah, you know, and again, from a broker perspective, I've had, you know, in my area, I'm in El Dorado County, and I've had a lot of folks that were impacted by the Caldwell fire, and everybody was very well taken care of. And I've been, you know, the feedback from the fires this year, very responsive. Also in my role, you know, I've been to Malibu after the fires and all throughout the state, and again, so I get this feedback pretty regularly over the years, and it's always been very positive. Again, the fair plan, in my mind, it's different from other carriers because, again, their goal is to take care of the community, take care of consumers. So the claims process is a reality that they prepare for, and they know these are major events, and their role is to step in and process the claims promptly, and that's really what I've seen. And again, it's always good to have I always recommend getting your broker involved so they can help quarterback and navigate through the process.
So one of the things that was a question early on is how the FAIR plan was going to interact with wraparound policies. Because if you have the FAIR plan, you generally need a wraparound policy as well. Have many of those issues been worked out, or is there still some uncertainty about where you file different claims?
Well, it just depends what. So there's two questions there. Yeah. So basically, as far as the wraparound, also the difference in conditions policy, again, in my experience in market availability, you know, those are elements that are not on the FAIR plan. So the main perils or the main coverages there, it's liability coverage, water damage, and theft. Those are the main elements that are on the difference in conditions policy that are not on the FAIR plan policy. And those are readily available in the marketplace. So again, that's still, in my personal opinion, that's the best place to get that coverage, because as an example, if you still have your autos with that carrier, you can still get a multiple policy discount, or from an umbrella, it still opens up those options. So as far as the claim, sometimes depending on the peril, the cause of the loss, it may be a question. You know, what type of event it was, how it occurred, you know, how it originated, and where it originated. So sometimes it may be in the middle, and you may be talking to both carriers trying to figure out which one does it fall on. So again, that's something you want to rely on your broker's expertise and work with your broker to help navigate that process if there is any question on which policy it falls on when it comes to a loss.
So one of the questions I want to ask is, if you have a private insurer, conventional wisdom is if you have a minor problem with your home, you don't file it with your carrier because you don't want your rates to go up. But let's say you have a water issue and you need to file it with your wraparound policy. Does that impact your FAIR plan rates in any way?
No, the FAIR plan does not look at your loss history.
Okay, so there's no sort of shared communication between the two of them?
No, there is a report that exists, a clue report, that would show your loss history, but the FAIR plan does not reference that.
Okay, and I think that's the answer to the next question I'm going to ask too, but one of the questions that I had asked of me by someone in the audience is, if you were in paradise and lost everything and moved into another high-risk home, can you get the FAIR plan, and then God forbid if you need it, do you still get the same kind of claim treatment on the back end?
Yes, there's no surcharge for the FAIR plan for having a prior loss with the FAIR plan. And you're still available to get it just like everybody else.
Okay. One last question on claims. I know a lot of private insurers do metrics for themselves of how fast they process claims and how well they make it through the system. Does the FAIR plan do something like that?
I'm sure they do. That's not a number we see, and usually it's customer satisfaction that comes across. I mean, that's when you know you're either hitting or missing. And again, these events just come out of nowhere, and the magnitude of them come out of nowhere, and the geography of where it's impacted comes out of nowhere sometimes. So there's some areas probably where it's much easier to accommodate. Other areas that may be more remote, more of a challenge. But again, I know they plan for that. They model it, they plan for it, there's resources. And again, all the areas where there's been fires, it's been responsive and it's been effective this year.
Right. And Phil, do you know, I want to move to the future because we are getting ready to run out of time here. Do you know what kind of rate increases so we know that most people that get on the FAIR plan are staying on the FAIR plan. You made that point earlier, even though it's intended to be kind of a last resort, come in, get off. It's not really working that way right now because the private insurance market hasn't opened up yet. Do you know what kind of renewal increases in terms of percentages either you're seeing or is out there globally that people should expect?
Related to the FAIR plan?
Uh-huh.
No, nothing's filed, and it's all public information. Nothing's filed right now. And again, I have not privy to absolutely everything, but again, that's not something I've heard in discussion. I think there's some other priorities that are being looked at right now. But again, an upcoming rate increase is not in the near future, as far as I know.
Okay. Well, that's good news. All right, so talking about the
Yeah.
Get in trouble for
future,
that.
Yeah, don't.
the FAIR plan has been around long enough now, or I shouldn't say around long enough because it's been around since the 60s, but has gotten enough attention lately that it also is gathering some lawsuits. And one of them has been around whether or not the FAIR plan has enough money. And I am specifically not going to ask Phil to comment on the lawsuit because he can't, right? But what I did want him to talk about is the comment that the FAIR Plan president made just earlier this year, that there was $300 billion in exposure, and remember, over $7 billion of that is here in this county. And at that point, they had about $200 million in the bank. And he did that as a way to preview the FAIR Plan's decision to get some reinsurance. So what is reinsurance? What did that do? What does that mean? And how would it affect kind of an average consumer here?
At a very basic level, because that's where I'm at, we collect premiums, and the premium goes into reserves for a loss, for anticipating a loss. And then if there is a loss, we would exhaust our reserves first. That's the first money out. And then the next layer is there's a layer of reinsurance. So it's basically insurance for insurance, but it basically provides coverage in addition to our reserves. It's a limited amount. It's not enough. Again, there's a process to determine how much to buy and what's allowable, all those things, and it's expensive. And then, so basically that's where the reserves will be used, the reinsurance will be used, and then if the need to cover claims is beyond that, there would be an assessment on the member companies.
And the level of reinsurance that the FAIR Plan has right now is $2.5 billion, is what it is?
I don't know the exact number,
Okay.
yeah.
Okay. So in addition, so that's a significant. So you mentioned a minute ago some structural changes. What do you see on the horizon for the FAIR Plan over the next year or so?
I would say just based on what's being put out there, the next priority is probably, or the initiative that's being talked about the most right now is increasing for commercial. They're increasing changing it from 20 million per location to, I think the talk is 100 million. And then they're also looking at increasing, so it's a per location, and then there'd be a limit per building. But again, it's commercially, they're looking to, it's the HOAs is really the main market that's being impacted right now. And again, that's something that's being looked at very seriously. And again, the more we're going into these arenas or expanding, it's just a sign that we're being pushed into more areas, and it's gonna obviously push more growth, and that's the wrong direction. So, but again, it's what the market needs, and that's, I would say, that's the next item that's being worked on.
So this probably doesn't impact anyone in this room, but there's also a high-end limit on homes of $3 million. And I suspect there's homes in Tahoe, well, actually, you told me that there were some homes in Tahoe that are above that amount, but also down in the Malibu area and Los Angeles where there have been a lot of fires. Do you think there will be any change in that number, or can you tell at this stage?
You know, it's hard to tell, but again, we run into that circumstance. It's a limited, it's a basic policy, and doesn't have all the bells and whistles that you would normally want or have. And that's kind of where it has that threshold. It's a reasonable threshold. Most homes fall in that category, but you do get in cases where it's not enough for what they want or what they need, and so that's just something the way it is right now. There's nothing more available. You know, again, I don't know of any immediate changes happening with that, but again, I know it's not able to solve every solution every need that's out there.
So I want to move to a couple of big picture questions. Insurance looks different in different states, and California certainly has been devastated by wildfire. Can you talk about just what is happening? I mean, we know what's happening in our area with the FAIR plan, but what does it look like in the rest of the state? Is it that same kind of exponential growth if we were to go down and look at Santa Barbara?
Oh yeah, Riverside, San Bernardino, the whole state. Like I said, the wildland-urban interface falls on just about every county. So you're seeing that level of growth in the wildland-urban interface, and the same thing with every other county. You know, very limited availability for homeowners. You know, and again, if you're somebody that has a prior loss, you know, you're starting with with maybe 2 or 3 options to begin with, and then now you've got loss history that you can't control. You had a water loss, you can't control that, and then now you can't get that policy. So now you're on the FAIR plan, you know, in the middle of a city somewhere, you know, that's nowhere near the mountains. You know, and that's where a lot of our growth is coming from right now. Those scenarios.
And then what about, California is not the only state to have these catastrophes, right? I think of Florida and others. What does the insurance picture look like in California compared to some of those other states? And again, just big picture.
Well, I guess the area that I like to point out, because again, it's important for you to understand this is tough. We're in a crisis, that we're in this circumstance. We've been on this slope since the campfire. I've been watching it. I've spent all day, every day since that moment talking to people that are being impacted. And that being impacted means you're being dropped, your rate is 4, 5, 6 times more than it was for maybe less coverage. It's very frustrating, and it's, again, look at a lot of times the frustration is pointed towards the FAIR plan, but I really hope you can see that the FAIR plan's role is being filled. They're doing their role, they're doing their part, and the best they can, and we're lucky to have them. Because if you're in Tahoe on the Nevada side, they don't have a FAIR plan in Nevada, and there's a lot of customers that we talk to that live in Tahoe on the Nevada side that just recently bought a home that can't get insurance on it, and you hate to say it could be worse, but and again, I understand your frustration. By no point am I trying to minimize that, because it is unfortunate. And not only is your insurance going up, your gas is going up, your eggs are going up, everything, and it just is really difficult for everybody. And it's a place we've never been in, you know. And that, again, I think looking at where we're at, you've really got to take a step back. It's easy to be frustrated because it is frustrating. More importantly, that's why you need to work with a broker that is going to help you. Shop, talk to different people, get different schools of thought, make sure you're not buying more than you need. You want to buy enough, you need enough, but you can really customize each element of your coverage. You want to work with someone that's going to talk to you through that and what that means and how it impacts the premium each step of the way, and really understand that and make sure you're updating that every year, having that same discussion at least every year, because inflation and other factors that might change in your coverages. So again, that's what I would want to share more than anything.
So, Phil, for me, shopping for an insurance broker is kind of like shopping for a doctor, right? I don't know your area of expertise. I don't know what I don't know. What tips can you give people as they shop for a broker?
Focus on what's important to you. Focus on the elements, your home, your asset, your home. It's where you live. It's the roof over your house. It's what's important to you. Your belongings, the level of that. Really make sure that those things are covered properly. And that's what you want to talk to. You want to start with the most important and work your way down. I talk to people every day that have to get to a point, cost-wise, to make compromises that are hard to make. I talk to people that decide to not have coverage on their stuff because they can't afford it. They're going to insure their home but not their stuff, or they're going to insure some of their stuff. I've got customers or talk to people that on a seasonal basis have a policy because they can't afford it in the non-fire season. It's terrible that we're in this place. And again, I think that's where we're at, and that's why it's more important to work with somebody that is going to help give you the best option possible of what's available. And it may seem like you're at rock bottom, you've got the worst option possible, but at least it's something right now, and the hope is that things will shift. What I'm seeing in other parts of the state, and this is my own crystal ball, and this has been the journey we've been on since the campfire, is what can we do as consumers and homeowners to make our house more insurable, to make for the day that insurance companies are open to writing in here again, and that's defensible space, that's home hardening. What's gonna not only make my house more appealing to an insurer, but what's gonna make me more fire safe? That's really where you want to spend your time. And if you can't afford it, there's Fire Safe Council, there's grants available, there's lots of resources out there that can help you. Firewise Community can help you. There's lots of resources. CAL FIRE can point you in those directions too. But I want you to all know you're not alone. There's more than a third, probably half of our state is in the same ballpark that you're in, and you just don't understand. You don't realize that yet. And I just wanted to share that with you.
So my last question is also a crystal ball question. The FAIR Plan was set up as an insurer of last resort in this very kind of narrow way, and as you described, it's expanded to commercial out of necessity. It's looking to expand dollar values and that kind of thing. Do you see a time when the FAIR Plan expands so that people don't have to have wraparounds as well, or is there a way that this all gets answered with more options to the FAIR Plan, or do we know at this point?
I'll tell you, anytime we're saying the words about expanding the FAIR Plan or making it do more, it's the wrong direction. And the fact is, they're here to help, they're here to fill their need, and as those needs continue, that's probably where we're going to see the evolution of the products or the coverages. But by no means is it intended to be less expensive than another carrier. But, and there's a difference between availability of insurance and affordability of insurance. And really the FAIR Plan was designed to make sure that you have accessibility to coverage when nothing else is available.
Phil, thank you very much for coming. This is not an easy subject.
Thank you.
I know no one expected to come and get rosy information. It's a very hard subject, and I really appreciate Phil's willingness to come and be so open. He is going to stick around for a few minutes. He does have to leave. His daughter's getting married tomorrow. And so he can't stick around too long, but he'll be here for a little bit. Before you leave, I want to invite you to next month's topic, which is going to be preparing for political violence in Nevada County. Terry McAteer will be talking with Sheriff Moon and the election chief Natalie Azona, so please come. A final thank you to the steering committee for coming, and we'll see you all next time.
Question for the crowd.
Well, hopefully they don't open up questions.
Yeah.